Hey Rick,
Hey Megan, how you doing?
I'm doing well, thank you. Thank you very much. I see you have a new background there. Looks
I do.
good. Different t-shirt. Perfect. You're ready to go.
Always ready to go.
All right. Well, let's talk about the hottest, latest news. It's all over my social media,
Yeah,
and
boy.
it's a 50-year mortgage. What's the deal? What does it mean? What's good? What's bad? It's not a done deal yet, but it's proposed, right?
Yeah, this going to be pretty much a done deal. We've already had discussions on this internally. I think you have to look at, I mean, Freddie, Fannie are looks like they're on board with it, but you have to look at the individual, not individual, but the secondary market investors, are they on board with it? I think they will be ultimately,
Mhm.
if not right up front to be on board with it. So it's an interesting concept. It's very interesting. I think the play behind this is to make housing be more affordable, if you will. That's kind of the play. Because look, let's face the reality. It's not just in Southern California, it's all over the country. I mean,
Mhm.
I was
Mhm.
in Austin, Texas with our family a month or so ago. I'm thinking, yeah, Texas, that's really low priced housing. No. How about a
Yeah,
2 million, 3 million everywhere? Neighborhoods 4 or 5 million. I mean, hey, that's Austin, Texas. And it's that way all over the country. Not always two
right.
or 3 million, but it's not 300,000 either, right?
Right, right. I know. I think it'd be great if house payments were 2,500 to 3,500 a month. That would really get people into some housing.
Mm-hmm.
But right now, I think the average new homeowner is paying about 5,500 a month for their
Yeah,
house
around
payment.
there. Mm-hmm.
Yeah.
Close to that
So,
for
all
sure.
right. So it's going to be pretty much a done deal. So talk to us about it. What are the pros and what are the cons?
Yeah, I think we're getting our head around this still. Look, here's the reality. It's you have to look at someone's objective, long term and short term. I would say that a 50-year mortgage is not for everybody. And I think it will take some time still for the mindset to catch up with what the thought behind it is. And so
Hmm.
let's look at what a 30-year does for us. First of all, you have to know that on a 30-year mortgage, if someone stayed in that mortgage, and that's the key, stay in the mortgage for 30 years, they're going to pay about 3 times that loan amount in interest expense alone.
Okay, 30 years, three times the loan amount. So if they're paying 800,000 for a house, they're really paying 2.4 million, right? Two,
Yeah,
no,
for interest. If their loan
no,
amount
no,
say three
I'm so
hundred
sorry.
thousand, they're going to spend about $900,000 in interest over the life of
Yeah,
that mortgage.
sorry, my math is
Okay, that's
terrible.
okay. That's all right.
Go ahead.
Now that seems like a big number, but look, I mean, I used to think that 30 years was like forever, and now I see people. I mean, if they just don't, here's the challenge I think for most people, and I get it. People keep refinancing their house. It's a mindset. From my perspective, and I get it. People won't take cash out because they want to buy stuff or pay stuff off. I get it, but from my point of view, I'm not saying it's everybody's point of view, but from my point of view, I don't think it's a good practice to use your house as a piggy bank. I just don't.
Hmm.
I think if you want to refinance the house to lower the rate, save 800 a month, yes, all day long, do that. Great move. But if you're just refinancing the house to pay off credit cards and pay off motorhomes and go on vacation, not a good investment because you're financing those short-term
Hmm.
assets for a long with a long-term loan. So and you
Yeah,
never pay
yeah.
down the mortgage. So a 30-year mortgage, still a great option, by the way. But let's look at what a 50-year option does for us. I haven't done the calculation yet in terms of what the interest expense is over the life of that 50 years, but let's face the reality. Someone going to stay on a mortgage for 50 years, chances are, I'd say slim to none. It's just not going to happen. Okay, so
Hmm.
let's look at why would someone do a 50-year mortgage? The idea behind a 50-year mortgage, I would say, Megan, is that it's for the buyers who are looking for more of a budget to get into a house, to save money on the payment, recognizing that this is how they're going to get into a house. And then maybe this isn't their forever house. They might think it's a 5 or 10 year investment to move to the next house. And that might be the best move for them for that moment. And so I think
Hmm.
that kind of buyer is going to be the right kind of buyer for a 50-year mortgage because the reality is they could refinance the house once their income goes up and they're more established, perhaps. They could refinance that house later on to a 30-year fix or a 20-year fixed. So
Hmm.
they're not going to stay in their mortgage for 50 years. Now, the longer they're in that mortgage, it's going to cost them a heck of a lot more money in interest expense over that same period of time. So, for example, on a 10-year, if you're in the house for 10 years on a 30-year mortgage, you're going to pay a lot more down on that mortgage on a 30-year than you would on a 50-year. So think of
Right.
it 50-year, you're just not paying down that mortgage. Your payments, they're just going to be pretty much all interest for a long time. Now, for a lot
Mm-hmm.
of people, that's okay because don't forget, wasn't that many years ago, gosh, maybe it was 15 years ago, we were doing interest only mortgages for 10 years and people like
Hmm.
those loans, right?
Right.
So think of this in the kind of the same terms. It's mostly interest, but let's look at the payment difference. I just ran some numbers on, let's say, for example, an $800,000 mortgage.
Mm-hmm.
And let's just say, for example, I'm not saying this is where the rates are today, just for example purposes.
I'm always so afraid to say rates. Listen, this is not
Yeah,
the rates today. Don't
yeah,
say
exactly. Yeah, exactly. So there's no disclosure here because it's not a real rate today. It's just an example purposes.
right.
Okay, so it's 6.5 at 800,000. The mortgage payment. Now, when I say mortgage payment, Megan, that does not count taxes or insurance. That's just the
Right.
mortgage. Okay,
Right.
you have to add your taxes and
Bill.
insurance on top of that.
Yeah.
Okay, so 800,000 at 6.5%. Your mortgage payment is $5,505 a month.
Sheesh.
Okay, on 800,000. Take that exact same house on a 50-year mortgage and let's assume again it's 6.5%. The payment goes down to 4,507.
Mm,
Okay,
big
so
difference.
it's a big
Four
difference. It's
thousand five oh seven. So it went
mhm,
down $1,500.
no 1,000.
Oh, 1,000. Okay.
Mhm. So $1,000 savings is a very good savings. That's a deal breaker for most buyers.
Yeah.
It
Yeah. But
really
I mean,
is.
most people aren't, people are living in their homes longer than they were when I first started real estate, but they're still not living in them
Hmm.
necessarily 20 years, but maybe 10 years, something like
Hmm.
that. So
Right.
it's not a bad option. You're not going to have that much equity, but at least you'll have something. And, it's better than renting, and not
All day
having
long.
control of your housing situation or your
Right.
pets or your garden or,
Right.
if you make improvements,
Hmm.
then
Hmm.
they're for you.
Hmm.
So
Well, you're going to get the tax benefit,
yeah, again,
whatever
tax
that is,
benefit.
right?
Yeah.
You get the lower payment for as many years as you want to be in that mortgage, and you get the pride of home ownership.
Yeah. Yeah. I think
So
it's probably, it's here, it's happening,
yeah,
and we'll just have to put our heads around it. But it's always like, you know, it's always like a little fishy when we have to
mhm.
create programs to make things affordable for people. And you're like, what's broken in our system that everything's not affordable to people,
Oh
for
yeah,
a
yeah,
large.
yeah, for sure. It's 100%. I agree with you on that, Megan. I think it's evolution of the market. If you look in history, for example, there was a point in time where people thought 30-year mortgage was insanity.
Right.
No, that's a standard nowadays. Now, will 50 years be the standard? Probably not. I don't think so. Who knows? But it's
Hmm.
certainly an interesting concept that I think that we're going to test out here for some time. And I think for some buyers, depending upon what their longer term goals are, that may be a very good option.
Yeah. Yeah. I think you're right. All right, Rick, thank you. Hot off the press, great information. We will pass it around and hopefully people will be able to make a informed decision by the
Yep,
time this gets rolled out.
100%. Good stuff.
Thank you. See you next week.